Hello, today is the 2nd of November. It is a Wednesday, and welcome to today's silver log and this silver analysis. And let's start off with a Fibonacci story. The Fibonacci analysis is manual. Normally, I take the last 100 periods on the automated high and low. But in this case, I'm going to choose the low set in here within the high in here. Now, within the correction yesterday or the downwards move, it came really close towards this line, but obviously it's a pierce above this level. What does this mean? Well, to me, one thing that it means is that linear Fibonacci defeated exponential Fibonacci. For most people, don't use these numbers, for they use different calculations. And if you go through the linear Fibonacci of this low, a shade below 30, which I think is 29.95, and the high of 35.67, on an exponential level, you get 32.02. On a linear level, you get 32.15, and the actual bottom was 32.11, which to me means that the linear Fibonacci was the victor. Now, for most part, this means absolutely nothing, even for those who use the Fibonacci variables, because they don't care about exact numbers. And the reason why is, as the market's selling off, that this support line can mean one of two things. If you're the type of person like me that states, okay, it's going lower, that means it's going to most likely bounce from this level. If you're holding any shorts, that means when it hits the Fibonacci line, you cover your shorts. It's also an area where you may want to go long. Now, if you're waiting for the exact number and you're shorting this market down, oh, you're now here at 32.10, 32.11, and you're still waiting to get that extra 9 cents. Well, obviously, that did not take place. But some people may put in a buy order for $32.02. If that's the case, you missed the boat on, of course, a day trade situation. Not a big fan of that overall. However, that's all part of the game and the situations within it. So now let's adjust the Fibonacci from this high and this low and see what this move currently tells us. What we have within this is a consolidation period for an hour, a few hours, at this 33.43 level, and the next Fibonacci is roughly or within the exponential level at 34.27. Well, the market has just managed to get up to that point. In fact, that's where we currently are at as of the recording of this video at 4:11 Central European Time, 10:11 a.m. Eastern Time, and 7:11 a.m. Pacific Time. It's also at this previous level of resistance. For within this Fibonacci from this move to this here, because it's been managed to move higher, it has shown that this rally as of yet has yet to fail, and thus so far is successful. And if it can manage to break above this level in here, it would show that the selling would become that of a failure and the market would be ready to continue its uptrend, and thus this is the correction that we've been waiting for, which managed to come back to its previous level of resistance. Of course, this market these days are harder and harder to trade, which really is nothing more than a leisure activity, day trading that is, because there's a skill involved in it, and it's like picking sports winners. If you're good at it, congratulations to you. Now let's move on to this little chart here, and you see, well, a black line that's pretty much barely moving up and down, and you have a straight blue, red, and green line. Well, let's move this out a bit more. Well, a bit more, even more, and some more, and we are now seeing that the lines are no longer straight anymore, at least that of the blue line, red and green lines. Definitely the green lines are not straight, and well, the black line is obviously a stock chart. This is a silver chart, and we're looking at this going backwards, and the green line represents the volume weighted average price since the most previous low in at $26.10 per ounce. The blue and the red lines are also volume weighted average prices. They both appear from significant levels. Question is, do you think the blue line is from the $50 top or the $17 breakout of 2010? And it's the blue line from the $50 top. That area was resistance for a while. It is now broken below it. The red line represents the volume weighted average price since the breakout in August of 2010. Pretty close to support in here, was support for quite some time in here, broke below at this level here, and has been resistance most recently. Let's fix this up now and actually put some numbers on the right hand side. Now we'll put some dates at the bottom of the screen. And when we take a look at this chart, there's going to be a time where I'll be talking once again about this particular trend line, but that's now a long, long ways away. But what we have seen is a incredibly long sideways consolidation that begun roughly about a year ago. So for the last 12 months, we have been in a sideways range-bound market. The bottom of the range is 25. The top of the range is 50. We are at the lower, somewhat lower part, really 38% of the way within the range. The middle part of this range is where the location of the volume weighted average price from both the breakout period of last year and the $50 top at the end of April is in or around the area between 35 and 38. I think the most easiest way to clarify this is when it finally can manage to break above the significant resistance period, not only here at the 38, 39 mark, but even at 43, 44, that this thing should really, really get going. And I say this because when you have a significant correction like this, that's oftentimes what can fuel the energy, the mana that is required for those types of situations. Putting this into even more perspective within the issue, we're looking at the half-year chart, which spans 6 months per candle. We are in the second half year of the year, and the two candles that we see are neutral consolidation type candles where you have closes near the opens and you have had OK pierces both above and below it. I don't know if you want to call this name a doji or whatever fancy name that you want to give it. To me, names really mean very little, but what's the analysis? What does this really tell us? And it really just does show that sideways consolidation within an already powerful uptrend, at least since the start of the decade. What's interesting again is you look at a chart of this nature, you have an up move, you come back down and have major support at the exponential Fibonacci. This is a situation where exponential Fibonacci kicked linear's butt really, really big because it found amazing support at this mark. And then it had some consolidation within this, telling us that we encountered that of a failure. This selling to be a failure because it has confirmed a breakout above the 61.8%. At the same time, also showing that this rally that occurred before some of you were born or when you were a child was that of a success because it maintained and held this 61.8% retracement. Now, another example where exponential Fibonacci has kicked linear Fibonacci's butt is within the major breakout lows of 1774 and this particular high. Because I remember some analysts were stating back in here that Fibonacci doesn't mean too much because it didn't find support. Yet they were using the wrong numbers because they were using linear Fibonacci. So what did exponential Fibonacci do? It found amazing support within this level. And then when it broke through it, it found amazing support in here. The Fibonacci mark is 2632. It bottomed at 2610. That's little less than 1% of a difference. And that will be the end of this video. So thank you for watching.